True or false? You can take your company life insurance with you when you retire. True or false? Maybe. Some companies do, some companies don't. It depends, okay? Now, a lot of people ask me when I do this presentation, why are we talking about life insurance when we're talking about retirement income? Well, there are ways where life insurance in retirement definitely can provide a benefit to your retirement income. All right, if you think about entering retirement with a mortgage, all right, and one of the spouses passes away, well, the death benefit that spouse has can be used by the other spouse to completely pay off the mortgage. What does that do? Now you no longer have a mortgage payment. Frees up cash flow. Okay. For people that do have a pension, when you are nearing retirement and you're up for a pension, but you haven't chosen it yet. So think of like a 3-year window prior to age 65. You know that you have a pension. You know your family is going to benefit from getting a pension, which is income over the course of your retirement. If you pass away before choosing the pension, they typically only provide you with a lump sum, and it's not as much as what the retirement income would have been over the course of your life. And so what do? Well, life insurance is effective there because if you do pass away prior to retirement, you can use that as like a pension source of income. All right. Permanent sources of life insurance have cash value built into them. You can use that. You can tap into that to supplement your retirement income. A lot of people that we work with use insurance as a tool. They use it as a tool to provide a legacy to their children in the event that they want to do that. So they don't have to worry about draining their assets down to zero at their time of death, because when they die, their heirs will get a tax-free benefit. All right?